Okay, so if you've read your textbook class, the first thing discussed there is concerning a sales agency. Now, it's it's enough for you to understand, class, that businesses decide to open a sales agency or a branch for the purpose of extending their operations, for the purpose of expanding their territorial reach as far as their sales activities are concerned, with the ultimate goal of increasing their revenues. Class. So it should be very easy for you to understand that the main purpose why businesses would put up a sales agency or a branch is for the reasons of their desire to increase their revenues. Okay. So at this point, it would be better for us to focus on the difference between a sales agency and a branch. Okay. Again, as to their similarity, their purpose is for the entity to be able to generate more revenues, for the entity to expand its business operations. For their distinctions, class, which is a common theory question, you would be asked in what way is a sales agency different from a branch? Number one would be, and this is also important for us, a sales agency does not maintain its own separate books, while a branch will have to maintain its own separate books. Sound accounting policy will require for a branch to maintain its own separate books. Because also, class, another difference is that a branch has a broader operation compared to a sales agency. A sales agency is there just to create visibility, class. It is just there to accept orders. Delivery of the products or goods will not even come from the sales agency. Accepted orders will just be forwarded from the home office, and it will be the home office that will fill these orders. It will be the home office that will ship these goods that are uh, ordered through the sales agency. Whereas a branch, class, can have its own stocks or inventories. So at the branch level, the moment there is already an order, the branch can already fulfill the order at their level. So again, basic distinction, class, the operations of a branch is much broader compared to a sales agency. Okay, a sales agency will just be listing its orders and will just be monitoring the use of the funds that are given to the sales agency. Whereas a branch can and will operate distinctly just like any business. Okay, that is why branches will normally have its own separate books. Another difference again is on their ability to hold inventories. Sales agency do not normally hold inventories or stocks, while your branches will have their own inventories or stocks. Your sales agency, although will be given samples, class, but that's just it. While your branches will have its own inventory. Now, again, the first thing discussed in the textbook is the accounting for a sales agency. There are two approaches, class, for accounting for a sales agency. Number one, first approach is to account for the profit separately. Second approach is to not account the profit separately. Record keeping, class, is maintained by the home office. The double entry system is used for the sales agency, but it happens in the books of the home office. As mentioned earlier, the agency will not have its own set of books. Okay. So if the home office, class, is interested in monitoring the profit of the sales agency, then the home office will account for the profit of the agency separately. But if the home office is not interested in monitoring the profit of the uh, agency, if the home office is decided that it will maintain that agency, then there will be no point in accounting for its profit separately. So again, two approaches in accounting for an agency. Number one, accounting profit separately, and number two, not to account profit separately. If you do not account for the profit of the agency separately, class, you will just mix all the revenues and expenses of the agency with that of the home office. What does that mean? If an agency has a sales class, has sales, it will be recorded using the sales account that is used by the home office for its own sales. So again, this is a scenario. The home office will have its own customers. The agency will also have its own customers. The question now is, how do you record the sales of the sales agency? If you do not account for the profit of the agency separately, then you will use the same sales revenue account. So the same sales revenue account will be used for the sales of the agency and for the sales of the home office. And again, if you do not account for the profit of the agency separately, the same expense accounts will be used for the agency and the home office. So you will just commingle all the revenues and expenses of the home office and the agency. But if we are using the other approach, class, where we will account for the revenue separately, you will maintain separate accounts to be used for the agency. Okay, but where do these entries happen? Where do these entries happen? Everything happens in the books of the home office. But you will devote a separate account for the transactions of the agency. You will devote a separate set of accounts for the transactions of the agency. Meaning, you will have two sales revenue accounts, the regular sales revenue and the sales revenue for the agency. You will use the regular sales revenue account for the sales transactions of the home office. You will use the sales revenue agency account for the sales of the agency. The same is true for the expense accounts. If you account for the profit separately, you will use separate set of expense accounts for the agency. You will set aside separate expense accounts for the home office. And with that, you will be able to see what are the revenues and expenses of the agency, and you will be able to compute for the profit of the agency. Okay, but under the first approach we've discussed, everything will go to the same account. So you cannot distinguish the operations of the agency from the home office. But if you use separate accounts for the agency and the home office, then you'll be able to separately compute for the profit of the agency. And how do you compute for the profit? Revenues of the agency minus expenses of the agency. But you will not be able to do that if you do not account for the profit separately. If you will just use the same account for the transactions of the home office and the transactions of the agency. And the most common question, class, for problems involving sales agency would be the computation of profit. How much is the profit of the agency? And that is why we reviewed last time the basic computation of revenues, net profit or loss. We begin with your net sales, we deduct your cost of goods sold, which will give you your gross profit, and you deduct your operating expenses, you would get your profit. Okay, and that's the most common question for agency problems. Compute for the net profit or loss of the agency. Okay, which leads us to problem 11-1, class. 11-1, Papa Incorporated of Makati opens a sales agency in Bacolod City, and a working fund of 50,000 is established on impress basis. The first payment from the fund is 5,000 for rent of the store space. What is the entry in the books of the home office to record this transaction? Okay, so the answer here, class, is no entry. But first thing I want you to take note of, class, is that the question is very clear. What is the entry in the books of the home office? Because as what we have mentioned earlier, the agency does not have its own set of books. Where do we record the transactions of the agency? All the transactions of the agency are recorded in the books of the home office. Okay, so definitely the question should be asking for the entry in the books of the home office. Now, I want it also to be clear, class, that the question being asked here is, what is the entry for the payment of 5,000? Okay, I do not want it to happen that you would get confused. What is being asked in this question? Is it the entry for the establishment of the fund, or is it the entry for the payment of the rent for the store space? Okay, what is being asked here is for the payment. Okay. Now, the answer here, class, is that there will be no entry at the time the payment is made, not because we are introducing a new concept here. Okay, you will have to recall your impress fund system, class. And what's the rule under the impress fund system? Expenses are only recognized at the time the fund is replenished. And what do you do the moment that you use funds, you use the money from the fund, you will not prepare any entry. Okay, and is this the first time you have encountered the rule or the concept on your for your impress fund system? The answer is no. This should have been discussed in your petty cash fund. And I believe petty cash fund is discussed as early as your basic accounting. Okay, and I would always emphasize this enough. We will have to use your past accounting knowledge, class. Even in the problems that we will be discussing tonight, no new concept will be introduced. Okay, and I do not want you to say that the subject is difficult because the topics are difficult. Where, uh, when in fact the reality is that you had problems in your basic accounting. Okay, some students would answer uh, letter A, debit, rent expense, and credit cash. Again, that's wrong. The payment was taken from the fund. And again, under the impress fund system, class, we do not prepare any entry upon payment. Entries are prepared only upon replenishment. The expenses are recognized only upon replenishment. And what's the reason behind that one, class? You remember that the payments from this fund are supposed to be for small or petty expenses. And it would be very impractical for you to prepare an entry every time you use a small amount from the fund. Okay, so for practicality reasons, the preparation of the entries for the payments of expenses paid out of the fund are done together, and it is done when the fund is replenished. Okay, and again, are we using a new concept to determine the correct answer in problem 11-1? The answer is no. Okay, you are just being tested in your knowledge on the impress fund system. Okay, and if the problem is silent, class, the funds maintained by agencies are definitely maintained using the impress fund system or the under impressed basis. Let's proceed to 11-2. In 11-2, class, basically the question there is to compute for the profit or loss. If it's profitable, continue. If it's losing, close. So basically what the problem is asking from us, class, is that you just compute for the profit or loss. And again, what are the things that we need to solve for our net profit or loss? We begin with our net sales, deduct your cost of goods sold to get your gross profit, and then deduct your expenses to arrive at your profit or loss. Are we given with our sales in this problem? Yes. And do we have any information here that would suggest that our sales of 868,000 is not our net sales already? No, because we do not have any sales return, sales discounts, or sales allowances. Okay, so our 868,000 here would already be our net sales. Next is to deduct your cost of goods sold and to deduct your expenses. And that is how I want you to approach the problem, class. If you already know what is being asked, come up with a solution already. Do not let your solution depend on the given. You come up with a solution and you look for what is needed in your solution from the problem. Okay? And based on our solution, class, what is the next thing that we need after we already have our sales? We need to get our cost of goods sold. Now, the scenario I am trying to avoid, class, is that if you would let the problem dictate what you will do, class, what would be a possible scenario here? Once you have your sales of 868, then you're given with the disbursements, you would simply deduct all the disbursements to get your profit. But is it correct to simply deduct all your disbursements from your sales, class, to get your net profit? The answer is no, because accounting is governed by accrual accounting. We do not rely on the actual payment. We rely as to when the expenses are incurred. So disbursements are not equal to expenses, class. Disbursements is not the same as expenses. What do we need? We need expenses under the accrual accounting. Okay? But again, if you do not come up with a solution on your own, you might be tempted to simply deduct all the disbursements. Again, under accrual accounting, disbursements is not the same as expenses. Disbursements simply represent actual payments. But as we have already learned, class, payments do not automatically mean that there are expenses, because the payments may be for future expenses. Okay. So the purchases there, class, is not our cost of goods sold. I hope that is clear to everyone. Purchases is not the same as your cost of goods sold. Okay, it does not matter that that is the amount of purchases we have paid. Okay, how do we solve for our cost of goods sold? How do we solve for our cost of goods sold? We begin with the beginning balance of our inventory. We add our net purchases and we deduct our ending inventory. Now, do we have any beginning inventory in this problem? The answer is no. How do we become sure? Because this is a recently established agency. So definitely you will not have any beginning inventory. So beginning inventory would be 0. Net purchases. Would it be correct to say that our net purchases in this problem is 800,000? Yes, because we do not have any purchase discounts or purchase returns and allowances. So purchases is 800,000. Okay. But class, take note, class, ha? Are your payments for purchases the same as your actual purchases for the year? The answer is no. You will have to check if there are changes in your accounts payable. But luckily, in this problem, it does not matter. Okay, our total purchases in this problem is 800,000. Once we have our purchases and our beginning inventory, what do we deduct to arrive at our cost of goods sold? Ending inventory. And are we able to get that in this problem, class? Yes, the problem tells us that there are inventories on hand of 180,000. This represents our ending inventory. Okay. So purchases of 800 minus 180,000 and the inventory, we will have cost of goods sold of 620,000. And then deduct that from our sales of 868,000, we will have a gross profit of 248,000. Okay. Because again, very important to go through gross profit. A lot of questions will be asking for gross profit. Next is to deduct our expenses. Okay. How much is our salaries expense in this problem? 140,000. Okay, that's the amount of salaries we have paid, and we do not have any information that the payments for salaries is not the same as our salaries expense. Rent of 40,000, that will also be our rent expense for the year because we do not have any information to suggest otherwise. However, even though we paid uh, 20,000 for supplies, class, is our supplies expense 20,000? No, because supplies expense is supposed to represent only those that are consumed or used. And what does the problem tell us? That there are still unused supplies of 12,000. And what will happen to these unused supplies? This will have to be recognized as an asset. If you use the expense method, when you paid for the supplies, you debited supplies expense and credited cash. At the end of the year, you will have to prepare an adjusting entry recognizing the supplies as an asset and crediting supplies expense to reduce your supplies expense. So the actual supplies expense here is only 8,000. So that should be the only amount that will be deducted from our gross profit. And then we have other expenses amounting to 10,000. So you have your 248,000 gross profit minus 140,000 salaries expense, 40,000 rent expense, 8,000 supplies expense, and other expenses of 10,000. This would give us a profit of how much? 50,000. 248 minus 140 minus 40 minus 20 minus 50. Minus 10 will give you profit of 50,000. That's why the answer here would be delta. Delta class. Okay. But again, what was being asked here? Compute for the profit or loss. And did we introduce any new concept class? The answer is no. Okay. The same concept of computation of cost of goods sold as you should have discussed before. The same rule for your supplies expense as you should have discussed in your basic accounting. Okay, the same concept of computation of income is just that you are asked from the perspective of an agency. Okay, again, we have not introduced anything new here yet. Now, you may have encountered a solutions manual class suggesting the answer to be loss of 118,000 class. That's because in the older edition class, the sales was only 700,000. If your sales is only 700,000, you will have a resulting loss of 118,000. But because the sales is at 868, the answer here should be profit of 50,000. Okay. So basically, what the author did, class, is stick to the same choices, but just change the amount of sales to arrive at a different answer. (11-3). The question here is still the same. What is the net income of the sales agency for the month ended June 30, 2016? Okay. And again, what do we need to solve for profit or loss, class? We begin with sales, deduct cost of goods sold to get your gross profit and deduct all your expenses. And are we given with our sales here? Yes. During the month of June, the sales agency reported to the home office sales orders. These were billed at 70,000. And that would be our sales. Question, only 40,000 was collected, class. Shouldn't our sales revenue be at 40,000? No, because again, under accrual accounting, revenues are not dependent on collection. The moment it is earned, it will be considered, the revenue will already be recognized. Okay, so if the goods are shipped, then they are considered earned. Therefore, the revenues on those shipments should already be recognized. Okay, but what's the relevance of the 40,000? This would have been relevant if you are asked how much would be the receivable. Okay, but we're not asked that. Okay, so we have our sales of 70,000. What's the second thing we need? We need our cost of goods sold. Are we directly given with our cost of goods sold in this problem? No, we will have to compute for our cost of goods sold. Can it be computed the same way we normally compute it, class? The answer is no. We will have to use algebra this time. What do we know about our sales price and our cost, class? Last paragraph, it was estimated that the gross profit on goods shipped to fill agency sales orders averaged 40% of cost. That means the markup or the gross profit is 40% of the cost of the goods, correct? So to get the cost of goods sold, class, since the markup is 40% of cost, do we multiply the 70,000 with 60%? But the gross profit is 40%. It is 40% on cost. So the relationship then between your sales price and your cost is that sales price is 140% of your cost. So to arrive at your cost, starting from your billed price, you will have to divide your 70,000 with 140%. And you would get the 100%, which is your 50,000. And that 50,000 is your cost of goods sold. Okay? But again, is it possible for you to get confused and instead of dividing 70,000 by 140%, you would have multiplied by 60%? Yes. What do we have to change in the problem so that the solution to solve for the cost of goods sold would be 70,000 times 60%? Change the 40% of cost to 40% of the sales price or the billed price. Okay? Now, the clarification, class, on gross profit rate based on cost and gross profit rate based on sales price or billed price. Is that supposed to be clarified or discussed in this subject? The answer is no. You have encountered these kind of problems already in your discussion of inventories in your intermediate accounting classes. Okay? And what is asked in this problem? Compute for profit or loss. What's the possible trick here, or the possible source of error on the interpretation of the markup rate of 40%? But is this something that is only discussed in this subject? The answer is no. Okay. So far we have our sales of 70,000, cost of goods sold of 50,000. We will have a gross profit of 20,000. Then you deduct all expenses. Okay, first would be the 2,800. Okay, the sales agency paid expenses of 2,800. Okay, even though it was reimbursed by the home office class, this expense is attributable to the operations of the agency. So you deduct the 2,800. Okay, another source of expenses class would be the decline in the value of your samples class. Many students would forget this one. Okay, although this is not actually new class, but this is a point of emphasis for agency problems. Okay, please take note of the decline in the value of your samples. Okay, if the value of your samples goes down, remember that inventories are to be measured at the lower of cost and the NRV. You will have to write down the samples to its current value class. Okay, realizable value. Okay, the sales agency samples were valued at 6,000. Okay, but how much merchandise samples was given to the agency class? 8,000. So there's a decline of 2,000. So you will have to report a loss of 2,000. So from your 20,000, you will deduct 2,800 and you will deduct a loss of 2,000. That is why your answer here is 15,200. Again, question is compute for profit. Nothing new is introduced. 11-4. Question is still compute for the net income or loss of the agency. What do we need? First is our sales, and we can find that in information number 2. Receipts of sales orders from the agency is 100,000. Okay. And then what else do we need? Cost of goods sold. Are we given with the cost of goods sold directly in this problem? Yes. Will problems always give you the cost of goods sold directly? No, but in this case, we are given with the cost of goods sold. Okay? So, we just continue with our solution. Sales of 100,000 and then cost of goods sold of 72,000 will give you gross profit of 28,000. And what's the next step? Deduct for your expenses. Okay, does number 1 provide any information as to the expenses? No. Number 3, still no. Number 4, yes. So deduct expenses of 9,000. How about number 5? Yes, because again, replenishment of the fund would result in the recognition of expenses amounting to 4,500. So from your gross profit of 28,000, deduct 9,000, deduct 4,500. Your profit here should be 14,500. And again, for problems to make agency problems difficult, class, they would just make basic accounting difficult. Okay, there's a problem that is present in a lot of reviewers and textbooks, class, wherein you're asked to compute for the profit of the agency, and the only challenge on the part of the student is to compute for the depreciation on the equipment that is given to the agency. If you're computing for the income of the agency, of course, you're going to include the computation of the depreciation expense attributable to the equipment used by the agency. Okay, no problem, it's straight line. Everyone is expected to know and master the straight line method. The challenge now is, what if the problem will use a different depreciation method? And that's normally what will happen, class. Because they cannot make agency problems any more difficult, they would make your basic accounting difficult, class. Instead of letting you use straight line, they would ask you to use double declining, for example. Okay, and many students would forget that if you are using the double declining method, you're supposed to ignore the residual or salvage value in computing for your annual or yearly depreciation expense. Okay, but again, the ways in which the problems will make the computation of agency income difficult has nothing to do with our discussion on agency class. Okay? So that's why it's very important for me that your basic accounting is solid. Now let's proceed to transactions between the home office and the branch class. If you've read your textbook, you would have been introduced to intra-company accounts. Basically, class, the books of the home office and the books of the branch are linked through your intra-company accounts. And the transactions between the home office and the branch are recorded using these intra-company accounts. Your intercompany accounts, class, are also called reciprocal accounts because they are supposed to be a reflection of one another, class. Whatever is the balance of one reciprocal account should also be the balance of the other reciprocal account. If one increases, the other should also increase. If one decreases, the other reciprocal account should also decrease. Okay? So this means the books of the home office will maintain a reciprocal account or an intercompany account, while the books of the branch will also maintain an intracompany account. Now, based on your readings, what intracompany account is maintained by the books of the branch class? Home office account. And what intracompany account is maintained in the books of the home office? It is the investment in branch account. Okay? So again, where can we find the investment in branch account? In the books of the home office. Where can we find the home office account? In the books of the branch. Okay? So for every transaction of between the home office and the branch, the home office will debit or credit the investment in branch, while at the same time, the branch should also debit or credit the home office account. And class, for those students who do not pay attention 100% of the time, if they will just, they would log off and log on every now and then, they would get confused when they hear home office. Because it's important for you to be clear. It is important that it is clear for you, class, whether or not we are talking about the home office as an entity and home office as an account. Okay? Because for some reason that's confusing for some students. Because again, what intercompany account can be found in the books of the branch home office? Okay? And where can we find the investment in branch account? Books of the home office. So I hope you'll be able to realize whether we are talking about the home office as an entity or we are talking about home office as an intercompany account. Is that clear? Okay, but if you're asked, how much is the balance of the home office account? Obviously, you're asked to look at the books of the branch. Okay? If you're asked, how much is the balance of the intercompany account in the books of the home office? You are asked for the balance of the investment in branch. Now, you might ask, I thought they're supposed to have the same balance. Why is it important to make a distinction? Okay, just remember your bank reconciliation class. Your balance per books and your balance per bank statement. Supposedly, your balance per books and balance per bank should have the same balance at all times, correct? But because of timing errors, one transaction is already recorded by one party, but the other party has not yet recorded it. It will happen that there is a moment that the balance per books will not be the same as the balance per bank. The same here. Supposedly, every time there's a transaction between the home office and the branch, the home office will prepare an entry, the branch will prepare an entry. And supposedly and ideally, the reciprocal account should have the same balance at all times. But again, because of timing error, it can happen that there are moments that the balance of the investment in branch account will not be the same as the balance of your home office account. Okay, for example, the home office ships goods to the branch. When will the home office make the entry? The moment it ships the goods. But when will the branch prepare the entry? Only when the goods arrive. So while the goods are in transit, the scenario there is that the balance of their intercompany accounts will not be the same. Is that clear? So it's important that you know what balance is being asked of. Are you being asked for the unadjusted balance of the investment in branch? Or are you asked for the unadjusted balance of the home office account? Okay? I hope that's clear. Now, before we proceed any further, class, I want us to again recap your basic accounting. Uh, for your sole proprietorship class, uh, for your capital, we've discussed this last time. What are the four transactions that will affect your capital account? Capital, when will your capital account increase or decrease? Withdrawals, investments, profits, or loss. Okay? Which of the four will cause the capital account to decrease? Withdrawals and losses. Which of the four will cause our capital account to increase? Profits and additional investments. Now, what do we do when capital increases? Do we debit or credit it, class, to increase the capital account? Credit. If it decreases, what do we do? Debit or credit? Debit. So if we have additional investment, let's say, for example, cash investment, what would be our entry? Debit, cash, and credit, capital, correct? Okay, what if you have a profit? What is your entry? Debit, income summary, and credit, capital. Because again, profit increases, capital. What if we have a loss? What would be our entry? Debit, capital, and credit, income summary. What if there are withdrawals? Okay, assuming withdrawals are charged directly to capital, what would be your entry? Cash withdrawal. What would be your entry? Debit, capital, and credit, cash. Okay? So if you have profits and investments, credit capital. If you have losses and withdrawals, debit capital. Now in your sole proprietorships and your partnership class, how do you name the capital account? You base it in the name of the owner, correct? If your sole proprietor is A, then you simply refer to it as A capital. If your partners are A, B, and C, how do you call their capital accounts? A capital, B capital, and C capital. The capital accounts is simply named uh, based on the owner. And that's how I want you to view or perceive the home office account class. The home office account is basically the capital account in the books of the branch. And if you're asked of the question, who owns the branch class? Who owns the branch? It is the home office. So this is just basically the same as your basic accounting. How do we name the capital accounts? We base it in the name of the owner, correct? A capital, B capital, C capital. That's what you've discussed in your basic accounting. Now, who owns the branch? It's the home office. And that's why the capital account there is your home office account. So the easiest way to know how to account for the home office account is to simply look at it as the capital account in the books of the branch. Because essentially the home office is the owner of the branch. So what does that mean? You will increase the home office account if there are investments and profits. You will decrease the home office account if there are withdrawals or losses. So if the operations of the branch results in a profit, what would be your entry? Or generally, what's the entry if you close the profit to capital? Debit, income summary, and credit, capital. But again, what is the capital account in the books of the branch? Home office account. So if the branch reports a profit, what should be the entry to close the profit? Debit, income summary. And instead of capital, you would be crediting home office. How do we normally close a loss class? Debit, capital, and credit, income summary. If the branch reports a loss, how do we close the loss of the branch? Debit, home office instead of capital and credit, income summary. Because again, essentially your home office serves the same purpose as a capital account. And that is why it's very important for me that you already know how to prepare entries involving your capital account because we're just using the same concept. What if there's investment? What's the entry? Debit. Let's say cash investment. Debit, cash and credit, capital. How do we change this to make it an investment by the home office? The home office transfers cash to the branch. It's just the same as if the home office makes a cash investment into the business of the branch. So normally, what's the entry for cash investment? Debit, cash, and credit, capital. But who's making the investment here? The home office into the business of the branch. So what will be our entry? Debit, cash, but instead of capital, our credit would be home office. Just replace capital with home office. And in your discussion of basic accounting class, normally, how are withdrawals done, man? Cash withdrawals are normally in the form of cash. The sole proprietor will take cash from the business. Okay, so how are we going to rephrase that one? The branch remits cash to the home office. But essentially, how should we view that transaction, class? How should we view that transaction? It's as if the home office is making a cash withdrawal. Okay? So, what's the entry for a cash withdrawal? Debit, capital, and credit, cash. But here, what do? We simply change capital to home office. So if the home office takes cash from the branch, our entry would be debit, home office, and credit, cash. Okay? And again, it's just the same. 4 kinds of transactions, class. Investments, withdrawals, and profits and losses. Okay? But for this point of view to work, class, we will have to expand our definition of investments and withdrawals. In your basic accounting, very simple ang mga instances of investments and withdrawals. Here, we'll have to expand our definition of investments. Anytime the home office gives something to the branch, class, anytime the home office does something for the benefit of the branch, anytime the branch gives anytime the branch takes something from the home office, we will consider that as an investment transaction. And if it is an investment transaction, then it should result in a credit to home office account. Then we will also expand our definition for withdrawals. Okay, anytime the branch gives something to the home office, anytime the branch does something for the benefit of the home office, anytime the home office takes something from the branch, we will treat that as a withdrawal transaction. And in that case, you should be debiting your home office account. Okay? And with those 4 transactions, class, with those principles, you should already know how to account for all transactions between the home office and the branch as far as the branch is concerned. Profit and investment, credit, home office. Withdrawals and losses, debit, home office account. Okay? And once you know the side of the branch, class, once you know from the side of the home office account, supposedly you will already know what to do in the books of the home office. Because if one reciprocal account increases, the other should also increase. Okay? The next thing you should know is the nature of your investment in branch account. What kind of account is your investment in branch, class? It is an asset. So what is its normal balance? Debit. So it increases with a debit and decreases with a credit. Okay? And if you credited the home office account, class, again, what does it mean if you credit home office account? Is it increase or decrease? Credit home office account, increase or decrease? Increase. So if you increase the home office account, what should you do with the investment in branch account? Increase also. So how do you increase an asset? Debit. So if you credited your home office account, you should also be debiting the investment in branch account. If you are debiting the home office account, what should you do to your investment in branch account? Crediting. Okay? That's why that's another explanation as to why they are referred to as reciprocal accounts. One will be debited, the other should be credited. One is credited, the other should be debited. Okay? But even without knowing the side of the branch, class, you're expected to know already how to account for the investment in branch account. Why? Because you already have discussions on investment accounting. Okay? But unlike what you have discussed before class, normally if the problem is silent, you will use the cost model to account for your investments. Investment in branch account is an investment that is to be measured using the equity model class. What does it mean? If you use the equity model class, the investment account will change based on 4 transactions. What do you think are the 4 transactions that will affect your investment account class? The same 4 transactions that affect your home office account. What are the 4 transactions affecting your home office account? Investments, withdrawals, profits, and losses. The same should also be the transactions that will affect your investment in branch account. Class, quick distinction. Again, this is not something new in our subject. What's the biggest distinction under the cost model and the equity model for investment class? Under the cost model, the carrying amount of the investment will not fluctuate regardless of the results of the operations of the investee. The balance of your investment account is constant. But under the equity model class, the balance of your investment account will fluctuate to reflect the results of the operations of the investee. Okay. Now going back to investment in branch. Who is the investor here? The home office. Who is the investee? It's the branch. So under the equity method class, under the equity model, you should adjust the balance of the investment account if the branch has a profit or a loss. Okay. Class, 4 basic transactions for investments class. If you make an investment, what would be your entry? If you make a cash investment from the books of the investor, what would be your entry? Debit, investment, and credit, cash. What if the investee declares dividends? What happens when the investee declares cash dividends? The investor will be receiving cash, correct? Okay. So what would be the entry under the equity method class? The entry there would be to debit, cash, and credit, investment account. Okay. But why would many students not have this as part of their stock knowledge class? Because they are more accustomed to the cost model. And what's the entry when there are dividends under the cost model class? The entry under the cost model is to debit, cash, and credit, dividend, income. And that's normally what you are exposed to. Okay? But again, under equity model, everything will affect profits, withdrawals, income, and investments and losses will affect your investment account. So if there are withdrawals class, what should be the entry in the books of the home office? Debit whatever asset was withdrawn and you credit investment in branch. Plus, if there's a profit, let's go back to the books of the branch. If there's a profit, what's the entry in the books of the branch? Debit, income summary, and credit, home office. Now, if there's a profit class, what should the home office do? Debit the investment in branch account. Again, if mo credit kag home office, you should also debit investment in branch. What do you think would be the credit class? You credit branch income. Under the equity method class, what do you do if the investee reports a profit? You're supposed to recognize investment income. But here specifically, our account title will not just be investment income, it would be branch income. So again, if the results of the operations of the branch is a profit, what would be the entry in the books of the home office? Debit, investment in branch, and credit, branch income. What if the results of the operations of the branch is a loss? What would be the entry in the books of the branch? Debit, home office, and credit, income summary. What do you think would be the entry in the books of the home office? Debit, branch loss, and credit, branch income. Debit, branch loss, and credit, investment in branch. Okay, so if we are to summarize, when do we debit the investment in branch account? If there are investments and profits from the branch. When do we credit the investment in branch account? If there are withdrawals and losses from the branch. But again, it's just here we will have to expand our definition of investment and withdrawals. What would be our expanded definition of investments, class? Anytime the home office transfers an asset to the branch, anytime the home office does something for the benefit of the branch, or anytime the branch takes something from the home office. We will treat that as an investment transaction, and that should result in a debit to investment in branch account. Okay? And what is our expanded definition of a withdrawal transaction? Anytime the branch gives something to the home office, anytime the branch does something for the benefit of the home office, or anytime the home office takes something from the branch, we will treat that as a withdrawal transaction. And that should result in a credit to the investment in branch account. So example is, let's just give example, class. The home office transfers an equipment to the branch. Okay? Will the home office prepare an entry? Yes. Will the branch prepare an entry? Yes, because this transaction affects the both of them. Which one do you want us to generalize first? Books of the branch, books of the home office. Okay. So, what kind of transaction is this one? As far as we are concerned, investment. Okay, what was invested by the home office? Equipment. And what does an investment do to the investment in branch account? Increase. And what should we do to increase the investment in branch account? Debit. So our entry should be debit, investment in branch, and credit. Do we have the home office account in the books of the home office? No. So debit, investment in branch, and credit. What do you think should be credited? Equipment. Is it correct to credit equipment? Yes, because the equipment of the home office will lessen. Why will it lessen? Because it was transferred to the branch. So what is the entry in the books of the home office? Debit, investment in branch, and credit equipment. How about in the books of the branch? What should we do with the reciprocal account? Let's start with the home office. This is what kind of transaction, class? Investment. So what should we do with the home office account? Increase. And how do we increase the home office account? Credit. Okay? So we know that the home office account will be credited. And then what do you think would be the debit? Equipment, because the equipment of the branch will increase because it receives additional equipment from the home office. Because what if the branch remits cash to the home office? Where do you want to start? Books of the branch, books of the home office. Home office. Okay? What's the scenario here? The branch remits cash to the home office. So it's just the same as the home office receiving cash from the home office. So how do we view this transaction? Investment, withdrawal, profit, or loss? Withdrawal. And what does the withdrawal transaction do to the investment in branch account? Decrease. And how do we decrease the investment in branch account? Credit. So we know that the investment in branch account will be credited. What do you think will be the debit? Cash, because obviously the home office received cash. Okay? Books of the branch. What do we do with the home office account? Increase or decrease? Decrease, because we view it as a withdrawal transaction. Okay? And how do we decrease the home office account? Debit. Okay? And what do you think would be the credit, class? Cash, because the branch gives up cash. Okay? So as long as you'll be able to determine what happened to the reciprocal accounts, class, the analysis of the rest of the entry should be easier. Okay? Yes, remember our expanded definition of investments and withdrawals, kasi I'll be asking you for them during the next recitation.